Have you ever wondered how the tax systems in the USA and Germany differ, and what impact they have on their respective societies? Imagine two countries, oceans apart, with vastly different tax systems. How do they compare? What do they use these taxes for? And most importantly, how well do these countries manage their taxes? These are the questions that often go unanswered, but not today. Today we delve into the intriguing world of taxes. The tax system in the USA is progressive, but what does that mean exactly? Well, in essence, a progressive tax system is one where the tax rate increases as the taxable amount increases. This means that those with higher incomes pay a higher percentage of their income in taxes. Now, let's break down the American taxes into three main categories: federal, state, and local. Starting with federal taxes, these are levied by the national government, and they're primarily made up of income taxes. The rates for these taxes are determined by income brackets. There are 7 brackets in total, starting from 10% for those with the lowest incomes, and climbing all the way up to 37% for those in the highest income bracket. These taxes fund a variety of federal programs, including defense, healthcare, and Social Security, to name a few. Next, we have state taxes. These vary greatly from state to state, with some states like Florida and Texas having no income tax at all, while others like California have rates that can go up to 13.3%. State taxes typically fund state-specific programs, such as infrastructure, education, and public safety. Lastly, there are local taxes. These are imposed by counties, cities, or other local governments, and they often come in the form of property taxes. Local taxes primarily fund local services like schools, parks, and libraries. Now let's talk about income tax brackets. In the US, the more you earn, the higher your tax bracket. But it's important to note that the higher rate only applies to the income above the threshold for that bracket. So for example, if you're in the 24% tax bracket, you're not paying 24% on all your income, just the portion that exceeds the lower bracket's limit. This progressive system is designed to distribute the tax burden more evenly among taxpayers, with those who have more contributing more. So that's the American tax system in a nutshell. Now let's cross the Atlantic and look at how Germany handles taxes. Germany, like many European countries, operates on a progressive tax system. This means, in a nutshell, that the more you earn, the more you pay in taxes. It's a system designed to distribute wealth more evenly across society and alleviate the burdens on those less fortunate. Let's start with income tax. In Germany, income tax is levied on a person's total worldwide income, minus certain allowable deductions. The rates vary from 0% for those earning under €9,409 annually, to a maximum of 45% for those earning over €260,733. Now let's talk about the value-added tax, or VAT. In Germany, the standard VAT rate is 19%. However, a reduced rate of 7% applies to certain goods and services, such as food and books. The VAT is applied to the sale of goods and services within the country, and it is used to fund various public services and infrastructural developments. Additionally, Germany imposes other significant taxes, such as the solidarity surcharge, which was initially introduced to fund the reunification of East and West Germany, and the church tax for members of certain religious communities. One notable feature of the German tax system is the income tax brackets. The tax brackets are designed to ensure that higher earners contribute more to the state coffers than those with lower incomes. This progressive nature of tax rates is intended to promote social equity by redistributing wealth and providing necessary social services. The revenue generated from these taxes is used for a variety of purposes, such as funding public services, social security, healthcare, education, and infrastructure development. This ensures that everyone, regardless of their income level, can benefit from the wealth of the nation. That gives us a basic understanding of the German tax system. Now that we have a basic understanding of both systems, let's compare them. Diving into the comparison, we can start by examining the tax rates in both countries. In the United States, the tax system follows a progressive structure. This means that as an individual's income increases, so does their tax rate. On the other hand, Germany also has a progressive tax system, but with a slight twist. The rates start at 14% for low-income earners and can go up to 45% for high-income earners. It's important to note that the definition of low and high income varies between the two countries. Next, let's take a look at the amount of tax collected. In the United States, the the tax revenue represents around 24% of the country's gross domestic product or GDP. In Germany, on the other hand, tax revenues represent a larger slice of the pie, coming in at around 40% of the GDP. This difference in tax revenue as a percentage of GDP is indicative of the broader societal and governmental differences between the two countries. Now let's discuss what these taxes are used for. In both countries, taxes fund a wide array of public services. In the United States, the largest chunk of tax revenue goes towards funding Social Security, healthcare, and defense. Meanwhile, in Germany, the majority of tax revenue is allocated towards social protection, health, and general public services. While the specific allocations vary, the fundamental purpose of taxes in both countries is to fund public services and infrastructure. As we delve deeper into the comparison, we find some stark differences. For instance, in the United States, corporations are taxed at a flat rate of 21%, while in Germany, corporate tax rates can reach up to 30%. Additionally, Germany has a value-added tax, or VAT, of 19% on most goods and services. This VAT is somewhat equivalent to the sales tax in the United States, but the rates and application of the tax vary widely across the states. Despite these differences, there are also similarities. Both countries, for instance, provide tax deductions and credits to incentivize certain behaviors, such as investing in renewable energy or pursuing further education. Moreover, both countries face challenges in their tax systems. In the United States, issues like tax evasion and the complexity of the tax code are often brought up. In Germany, critics point to the high tax burden, particularly for middle-income earners, and the complexity of their tax law. As we can see, while there are some similarities, the tax systems in the USA and Germany are quite different in many respects. But which system is more effective? We might assume that the answer is clear-cut, but it's not that simple. Evaluating the effectiveness of a tax system is a complex task that involves considering a multitude of factors. Let's start with the American tax system. The U.S. uses a progressive tax system, where the tax rate increases as the taxable amount increases. This could be seen as fair and effective in the sense that it places the heaviest burden on those who can most afford it. However, critics argue that it discourages economic growth and investment, which could potentially lead to less tax revenue in the long run. On the other hand, the German tax system is known for its high tax rates, particularly for high-income earners. Germany uses these taxes to fund a wide range of public services, from healthcare to education. This leads to a high standard of living for its citizens and could be viewed as an effective use of tax revenue. Yet, the high tax rates can be a deterrent for businesses and individuals, potentially limiting economic growth. Both the American and German tax systems have their strengths and weaknesses, and the effectiveness can be subjective, largely depending on one's perspective. What might be seen as effective for one person might not be for another, based on their income, tax bracket, and personal beliefs about the role of government. So, the effectiveness of a tax system can vary greatly depending on various factors. So, what have we learned today? We've journeyed through the intricate world of tax systems in the United States and Germany. We discovered that both systems have their unique features, with the US employing a progressive tax system and Germany employing a combination of progressive and regressive taxation. We've seen how these systems affect the distribution of wealth in both societies, with Germany's system being more redistributive, while the US system allows for greater wealth accumulation. We've also noted how the revenue from these taxes is used differently in both countries, with Germany placing a stronger emphasis on social welfare programs and the US focusing more on defense and infrastructure. In terms of effectiveness, both countries have had varying degrees of success in managing their tax systems. While there are areas of improvement in both, the key takeaway is that each system reflects the values and priorities of its society. And that wraps up our comparison of the tax systems in the USA and Germany. Until next time, keep asking questions and exploring the world around you.